Welcome to our series, Moving America Forward. Each week we'll be focusing on America's entrepreneurs as they take us to new roads, new opportunities, new ways to fill the gaps left by today's failing companies. Our series will be looking at that and a lot more. So come with me and watch as the entrepreneurs of our nation move into the future.
And I'm Doug Llewellyn here in our studios in Los Angeles with our guest today, who is the president, the chairman of CBC Retirement Partners. It's a wealth firm located in Columbia, Maryland, between Baltimore and Washington. I'd like you to welcome him now, Peter Hibbard. Mr. Hibbard, welcome. Nice to have you with us.
Thank you. Nice to be here.
You know, before we begin in depth, because you have a really amazing story to tell, I want to point out that a little while ago you had a chance to answer some questions from William Shatner. Let's take a look at a brief portion of that now and see how it went. Okay?
Okay.
Watch this.
I know that being successful in business today is not easy. Why don't you briefly describe what you do and what sets you apart from others in your field? And do you feel your business is helping to move America forward?
Mr. Shatner, business owners across our nation have countless tough decisions to make. How do they keep their employees happy? How do they continue to make money, protect themselves, and eventually pass on their business? We are financial advisors, but what separates us is our dedication to small to middle-sized businesses. We help them create great benefits for their employees as well as manage the business and personal finances so that the business owner can sleep easy knowing that his or her future is secure. We help business owners climb the mountain of tax efficiency to a secure retirement income, and that, Mr. Shatner, is how we help America move forward.
You know, that's very interesting because I know you do things other than just help small and medium-sized businesses. One of the things you kind of specialize, as I understand it, is you help high-income earners preserve their wealth and, in many respects, avoid giving it all away to the government in taxes.
Yes.
That's one of your specialties.
Right.
Tell me a little bit about that because that sounds pretty fascinating.
Well, I began this in 1976 when I saw a book by the Brookings Institution about a voluntary tax, and they talked about the DuPont family and how they have, in a 70% estate tax area, avoided paying an estate tax greater than 5%. It turned out that it was primarily knowledgeable advisors who could implement the tools and techniques needed to do that, and I wondered why that could not be done in the estate tax arena, or excuse me, in the income tax arena.
Right.
And the way we did that was we reached into the tax code with 80,000 pages and picked out gems that allowed us to create structure and systems that help business owners and high net worth individuals really reduce or eliminate their income tax and estate tax.
So I know you went through the whole tax code and really analyzed it and pulled things out that have been put in there back in the 1950s that are still valuable. Is that right?
Yeah, that is correct.
Still legal.
Still on the
Still
in the tax
effect.
code. Yeah.
Yeah.
Part of the regulations and part of the tax code.
Which a lot of other people just don't even know about.
Right. That's correct.
So bottom line is you're very effective at doing that for those high income earners.
Yes, and that's why we created the Mountain of Tax Efficiency with 16 different techniques and tools that are high net worth and high income earners can really reduce and in some cases eliminate their taxes.
You know, in addition to doing that, you write books. This is kind of interesting. This is one of the books that Mr. Hibbard has written. He has another one coming out shortly. We'll talk about that. But this is, you make the reference to the red zone of retirement.
Right.
A lot of people may not understand what that really means. What is the red zone of retirement?
Well, the red zone of retirement is a football analogy where the red zone for retirement is 5 years and 10 years after retirement, where if you run into any of the dirty seven, I call them the dirty seven. Yeah. The seven things that can destroy your entire retirement if you run into these issues in the first 5 years prior to retirement and the 10 years following retirement.
So that's what you go through. Let me mention some of those. They are the dirty seven. You say market risk. Explain why that's one of the dirty seven.
Anybody who lived through 2008 and 2009 knows what market risk is when they saw 30-40% of their account drop, particularly if you were thinking of retiring that year.
All right, then you have sequence of return.
Yes, sequence of return is an issue where you do not want to have lose money in the market in those 5 years before and 10 years after retirement, because that will be the most devastating time. It's not, and if you lose money when you're 80s or 90s, it's not that big a deal. But if you lose money, so the sequence of when your money earns money is very critical to the whole process.
It's very important indeed. And then you have the term of inflation or deflation.
Well, inflation kills retirement planning, but much of what's happened in Japan with deflation also has a major impact on the ability to continue to retire and earn money on your money.
Okay. And then one that seems kind of obvious, long-term health risks, that's for the individual themselves, right?
Right. Right. Incurring a long-term health event for yourself or your spouse can devastate your retirement income and wipe it out and put you in a destitute position where you have to go on Medicaid. So it's a really important thing that while you're leading up to retirement that you plan for long-term health care issues, potentially.
Okay. Very good issue. And then, of course, taxes.
Yeah, taxes, which is why we've created the Mountain of Tax Efficiency, because we help reduce or eliminate taxes in many cases.
And regulatory change.
That's the most difficult thing for us to manage, because regulatory change can come out of the woodwork and surprise us.
Right.
And the question most of our clients say, how much do you trust the government not to change the rules down the road? And that's something very difficult to deal with.
You can't do that.
No.
No one can, yeah. And then the seventh one is longevity. You mean longevity of life?
Longevity of life, because the longer you live, it's the multiplier of all the other risks, because the longer you live, the more likely you're going to run into one of the other six
right.
dirty seven.
Right.
Right. So that, and the longer you live, the more likely you'll have a long-term care event, the more likely inflation and market returns will affect your return.
So a lot of these are all covered in this book, The Red Zone of Retirement.
Yes.
How do you go about helping employees of companies?
Well, we bring a process to the employer that is normally not found in 401k and other retirement plans. Most employers will bring in a financial advisor and or a broker, and that broker will talk about asset allocation, what investments to use.
Right.
We think that a courageous retirement plan should bring in the 5 pillars. We call it the 5-factor.
Okay.
And there's 5 things we think need to be put into a 401k in order for employees to have a high probability of successful retirement. And those 5 things would be automatic enrollment, an automatic investment option if the employees do not do well or know how to make their investments, an automatic escalation of their contributions, and the 4th is a re-enrollment process where if employees make mistakes, we re-enroll them to do a better job of allocating their assets. And then finally, a courageous retirement plan will have a stretch match, where we teach the employers how to stretch out the match so that we encourage employees to continue to contribute more at a higher level over time.
Okay, I get it. Well, these are all very interesting points. You have a number of other things you talk about. One of them is a concept stacking. I'm not sure what that means. What does stacking mean?
Well, many advisors do not know that, that companies can put in more than one employee retirement plan. And many companies have the 401k plan.
Right.
But many times we have higher income employees or business owners that can't retire on $18,000, which is the maximum contribution to a 401k.
Right.
So we stack on top of the 401k a second plan or even perhaps a third plan, which are designed to let your higher income employees have a higher income replacement ratio when they retire, because they can contribute more money into those plans than you can contribute into the 401k plan.
Interesting. Very interesting. Talk to me a little bit about pensions. For many, they're the thing of the past, right?
They are a thing of the past in many large companies, but they've come back to the forefront in small companies where, but even in 401ks, we teach employees how to have paychecks for life, because growing assets for retirement is important, but what is more important is that you grow retirement income, that you have income that you can't outlive, that you can't destroy, that will be there for your lifetime, whether you live to age 90, 100, or later.
Right.
So it's all about income planning.
So it is. What role does life insurance play in all of this?
Well, life insurance is at the top of our pinnacle of tax efficiency, because besides Roth, it is the only other product in the United States under our current tax code where we can grow our money tax-free, have tax-free earnings for the rest of our life, have all of our expenses paid with pre-tax money, and have the ability to have tax-free retirement income that we can never outlive.
So then you do utilize life insurance.
We use life insurance, but there's very few insurance companies that have the right product provisions. And there's only 5 or 6 in the United States that I would use to help clients in this endeavor.
You know, it's interesting. I want to point out you're headquartered in Columbia, Maryland. Can you work with people who don't live in Maryland? I mean, do you work with people in other states as well?
Yes, I travel extensively throughout the United States in our practice, although it's primarily Eastern Seaboard. I go to Dallas, California, quite across the country for many meetings.
All right. And I wanted to also ask you about what you should say to your CPA. A CPA would be someone who would work with you, right? I mean, they need a CPA. They also need you.
Yeah. We work closely with CPAs and sometimes tax attorneys because the CPAs are very vital to the whole process, but they are as much niche players as I am a niche player, and we feed off each other with regard to our knowledge and our coordination of our efforts. And so it tends to be that CPAs and we are teams in working for putting our best efforts forward for clients.
How did you get into this business?
Yeah. After the Marine Corps, I was recruited into the insurance business, and I found out that business owners kept asking me, "Is that all there is?" Which is a song from the 1960s with.
Remember?
You remember
Peggy
that?
Lee.
Peggy Lee. Very good. Is that all there is? And business owners say, "Do I have to pay these taxes? Is that all there is? Is this all I can do for my employees? Is that all there is?" And so, do I have to sell my business and pay all this tax? Is that all there is? And so, after hearing that, I became very interested in creating methodologies and processes that help business owners live a life where they don't have to worry about, is that all there is?
You know, I get the impression you're one of a very few who specializes in this area, really helping people make sure they aren't overpaying their taxes. And they're not doing anything illegal by not, by paying only what they have to, right?
Right. I've never lost a tax deduction in 44 years, but yes, we live strictly within the goalposts of the tax code. But as I mentioned earlier, within 80,000 pages of tax code and regulations, there's gems in there we've been able to mine that, even though the tax code is designed to extract money for you, there's gems in there that we can help you keep more of your money.
That's very good. Sir, this has been very interesting. Thank you very, very much.
Thank you.
Now it's my honor to present this prestigious award to Peter Hibbard, the chairman of CBC Retirement Partners in Columbia, Maryland, for the outstanding work that his firm is doing to help keep moving America forward. Mr. Hibbard, congratulations.
Thank you, Doug. Very much appreciated.
You are welcome. And I also want to point out that Mr. Hibbard has a new book that's just come out. It's called The Road to Success, and I think you'll find it very fascinating indeed. It's been written with Jack Canfield, and he's behind the Chicken Soup book series,
yes,
right?
Chicken Soup series, yes.
So congratulations, sir.
Thank you so much.
It's been a pleasure chatting.
My pleasure chatting with you also.